Hey there, Joe DeSanto here. Thanks for joining me again in another video. In this video, I'm going to talk a little bit about tax records and what records people should keep and for how long and that sort of thing. But before I get to that, if you like my content, please do the old like and subscribe dealio. I appreciate it. Okay, so tax records. What should people keep and why and for how long and so on? Well, it kind of depends a little bit of what the tax record is for, but let's start out with the basic uh, tax return and tax return supporting documents like invoices or receipts or whatever. You generally want to keep those types of things for 3 or 6 or really 7 years. And the reason I say that is if you get audited, what I hear is the IRS can go back 3 years just generally. If your underreportment of income is more than 25%, they could go back 6 years. And if there is some kind of fraud or they can prove that, they can go back even further, I think 7 years. So you certainly do want to keep any supporting documentation for deductions you made in your tax return and that sort of thing for at least 7 years. Now, many people will, round up their deductions by combing through their bank statements or credit card statements around tax time. So if you do it that way, you probably want to keep your bank and credit card statements as well. Now, you generally find that most banks will keep live 7 years of bank statements, particularly for this purpose. My bank goes back 7 years. I don't know if every bank does that. If not, you certainly can contact the bank and get a copy of statements, I think, going back that far. So that's one, consideration for keeping tax documents. Then there's the question of, well, how long do you keep your tax returns in general? Well, my opinion is, nowadays they're PDFs, they're digital files, just keep them forever. Keep piling them up. You may not want to store them directly on your computer. You might want to put them on like a thumb drive. And, if you're concerned about security or someone accessing your computer and getting your tax records. But certainly you would keep, PDFs of your tax returns, I don't know, forever. Why not? It doesn't take up much space. Now, I actually have some tax returns in a filing cabinet still that go back before the PDF versions of tax returns. And I don't know, they're not bothering anybody, so I keep them in there just in case. I think, in the sense that those may be valuable at some point is if, later in life you have some issues that come up around, I don't know, IRA contributions or perhaps, when sadly you might pass and you pass some information, something down to your kids. Maybe they would need access to older tax returns for some random reason. I can't say that I know what all those reasons are. I'm not a tax attorney or an estate planner, but I'm just kind of guessing, honestly, like what possible things could come up where you could make use of those. And those are a couple things that come to mind. Now, some other records that you would want to keep for different reasons from different periods of time are these. So, when it comes to real estate, for example, whether it be your primary residence or a rental property, when you do renovations to a primary residence or rental property, or you have to replace the air conditioning unit, or something large in terms of a repair or an investment in the property, that cost goes towards what's called your basis. And that is inevitably comes into play when you sell the property and you're going to calculate your capital gains tax. If you've done investments or improvements into the property and you want to essentially take those as deductions against capital gains, you're going to need backup for that work. And you might live in your house for 10 or 20 years, so the work you did by the time you sell could be from a long time ago. Well, you want to have those receipts or invoices or whatever so that you can substantiate that work if you need to. So that's a different kind of tax document that you would want to keep certainly until you sell the property, and then of course thereafter for the reasons I mentioned earlier in the video here. And if you keep your tax returns, it's sort of immortalized in there anyway. But you would keep both your tax return and the supporting documentation in a folder all together, maybe on that thumb drive that I mentioned. So that's another particular scenario in different type of tax documents. Another one that I'll mention before I go here is you probably want to keep any tax documents or verification documents of IRA or 401k contributions, things that you're doing throughout your life, but you're not going to be accessing until later down the road. I mean, in the case that some questions come up when you get to the point of making withdrawals from your IRA, or perhaps you think you made a contribution to your traditional, but it got flagged in a Roth or something to that effect, you might want some backup documentation to support your claim that would eventually happen down the road. So if you're, again, if you're making contributions to IRAs and 401ks, that should all be sort of immortalized in your tax return and be part of those supporting documents like your W-2s or 1099s or whatever it may be that validates all those transactions in that given year. Not only would that data be in the tax return, but you should just keep with the tax return whatever that supporting documentation was, i.e. W-2s, 1099s, verifications of contributions into 401ks and so on. You pile it all together for that year, you give it to your tax preparer, or if you're doing your own taxes, inevitably you get the tax return back, put it in that same folder with all those documents, and just keep it. It doesn't hurt, it doesn't take up much space anymore, we don't have filing cabinets full of paperwork, so it doesn't hurt to keep. So those are my thoughts there. I will see you in the next one. Bye.